So I'm honored to be here, and I would like to call on our panelist for this session, which is about digital trade in the era of African Free Continental Trade Area, unleashing potential and addressing challenges. So I would like to call on Carol Jamie Karema, the Director of ICT in Equity Bank. Welcome. I would like also to call Solabade, the partner, and from LPNG, Nigeria. I think he's still outside taking a picture. Yeah. So yeah. So nevertheless, I think we can still use this opportunity to talk about the trends and also potential and challenges that African Free Continental Trade Area offers. And I'll start by letting Carol introduce herself and also tell us about your organization, the purpose and the mission of Equity Bank, as we're waiting on Mr. Solabade. Here you are. Welcome, sir.
Okay, good morning. My name is, as you mentioned, Nishimit Carol, and I work for Equity Bank. I'm currently the General Manager in charge of ICT and Business Transformation. So as Equity, what do we do? Equity is a regional bank that has been incorporated in Kenya, and it's currently operating in 6 countries. So Rwanda is one of the 6 countries where Equity operates. The main purpose of the bank is transforming lives and livelihood of people, and to ensure that there's financial inclusion for all the people. So as our group CEO likes to say, is to ensure that all Africans are able to access any financial means so that they can improve their lives on a daily basis. So I think that's all.
Thank you very much. Welcome, sir.
Good morning, everyone. My name is Shola Badeshobeto. I'm a partner at Africa Law Practice. We are a corporate commercial and dispute resolution law firm based in Nigeria, but we have offices in Kenya, Tanzania, and Uganda. And we are an AFCFTA focused law firm, so we provide trade advisory services and training as it relates to the AFCFTA agreement. And we typically convene town hall meetings about the AFCFTA, put a communique together and send it to the AFCA Secretariat. Okay. I hope everyone heard me. Thank you.
Fair enough. Yeah. Thank you very much, and it's really quite interesting that we have really such a dynamic panel. This is a question for all of you. The Digital Trade Protocol has been recently approved by the AU, and I'd like to know what are your expectations on how this protocol will shape the future of digital trade across the continent. I'll start with you, Carol.
Thank you very much. First of all, I want to give a background on when Equity started the journey with the continental trade. It started in, our group CEO signed an agreement, an MOU, in 2022. And this was just after the COVID, because Africa was one of the countries impacted by COVID. And one of the main reasons you could see is because most of our countries mostly have raw materials, but then we had to depend on the external countries to get processed food, for example. So that challenge, and you could see also around the whole world, we had challenges with logistics. So you could export food, you could export products. Unfortunately, they're not rich because you remember the Canal of Suez, the challenges around the Canal of Suez. And that's let us think and brainstorm and see what could we do. Why should Africa wait? You have the raw materials, but these raw materials need to go and be transformed elsewhere and come back to now be consumed by the continent. So among the MOU that was signed with the African Continental Trade Agreement was to put in place an African Resilience and Recovery Plan. And that African Recovery and Resilience Plan were focusing on 6 points. The first point was to transform agriculture for the continent. Because if you look at Africa, for all of us, we did geography. You can imagine the number of raw materials we have across the continents. We have oil, we have coffee, we have everything to sustain the continent. So the first purpose was to transform agriculture. Secondly was to transform manufacturing. We have raw materials, what can we manufacture ourselves so that we can consume this product? And if you look at the population of the continent, we have the biggest today. When you look at all the reports, Africa is the next place to be because of the consumptions, the youth that we have. So there's so much that can be done in Africa. So even ourselves, we can sustain our markets. Number 3 was giving facility to SMEs. Because we do business, all of us, but then there's a challenge of access to finance. I think the minister discussed this. So it was difficult for a lot of startups, for example, MSMEs to get financials means so that they can produce more and even to be able to sustain the markets. So that is number 3. Number 4 was to ensure as well there's also capability to provide loans, because today you can have a great idea, but if you don't have the means to extrapolate it and be able to produce, it won't be possible. So as part of the Africa Resilience and Recovery Plan is to ensure there's at least 65% of the people that are asking for loans, the MSME. So there's a lot of happening there. Now, around also, the last one is innovation and technology. Because yes, you can do business, yes, we can have inter-country trades, but then there's some limitations, and I think we're also going to discuss the challenges. There's a challenges around infrastructure, and when there's a challenge around infrastructure, accessibility is a problem. So when you have a protocol that is improving the digital trade, it's very important, because now you're opening up to the market, to everyone. So you can have traders from Nigeria, for example, having access to the market of Rwanda and vice versa. And that's through technology. So we're discussing AI, for example. So if we have a protocol now, then that's where the legal family comes in, is how do we open up? How do we, think of how we can do inter-country trades and improve and grow Africa to be sustainable and produce for their own people. So this, the digital protocol comes in time, because this is a time when we need to grow. If today, I think we're saying we have almost 55 countries now that have already signed, so there's quite opportunities. But then infrastructure accessibility is still a problem, and technology can remove those barriers. So that's what we can see. And something that Equity is doing is that already with the 6 countries, we're already doing a lot of inter-country transactions. So now that can go further. If we have now different companies, different investors, different startups that can pass those barriers, then the digital trade protocol will really support that's what to be achieved. Thank you.
So I'm just wondering if Carol's in my head, because she's literally said everything I wanted to say. So I might have just she made some very good points. I think Africa is on the verge of something massive when it comes to digital trade. A few countries in Africa do need an industrial revolution, because the manufacturing sectors are not good enough to be able to export. Why are we sending goods to be processed and value being added to these goods and then importing them with ridiculous tariffs? It's unheard of, but it's happening in Africa. So that is the reality. Just to provide some context, the first phase of negotiations in terms of protocol was on goods, services, and dispute resolution, and then the second phase was competition law, intellectual property, and another one.
finally, women and youth and digital trade. And I asked the Secretariat what was the reasoning and rationale in negotiating that protocol last, because it's so significant. Like the Minister mentioned, SMEs comprise mostly of women and youth, and digital trade is going to be massive in terms of taking Africa to a completely different frontier. The reality is we are miles behind regions around the world when it comes to digital trade. There is no digital inclusion as far as I'm concerned. If you look at rural areas, people continue to be recalcitrant when it comes to embracing technology. There's a demographic in Africa, especially the older people, who always have reservations about embracing technology. Listen, I love my mother, but she calls me to order her Ubers. And I'm trying to get her to embrace it. But there is a demographic that we need to cater to. There needs to be capacity building. There needs to be training. And we're African Law Practice, in the context of the AFCA, are very, very inclusive in terms of how we disseminate information about the AFCFTA and the protocols, because the reality is the Secretariat hasn't given us enough information to chew on. For example, if I'm selling cocoa in the north of Nigeria, how does the AFCFTA agreement affect me? How does it transcend into my business? So those are the key things. We'll talk about the challenges. Why do we continue to benchmark our currencies in Africa against the dollar and the euro? If I'm rendering a service and I want to pay in Rwandan franc in Nigeria, for example, why do I need a third currency to be able to process that payment? The Afrexim Bank have come up with, the Pan-African Payment and Settlement System, but it's always going to have teething issues. But we need more of that. You're going to see a deviation from physical banks to digital banks, which is what is happening at the moment, and we just have to embrace it as Africans, because we are at the cusp of something great with the AFCFTA agreement, and we need to push it to a completely different level, because we cannot continue to lag behind other regions in the world. It's just not. Like Carol said, we have everything here, so we just need to be more intentional about how we go about it.
Yeah, thank you very much.
It's quite interesting when the Honorable Minister also talked about policymakers always playing a catch-up game, and now more than ever the panelists have really stressed the fact that it's now time to do what we're supposed to do, taking advantage of the opportunities that the agreement is offering instead of playing a catch-up game. So I want to ask this one to Carol also about what is Equity Bank doing in terms of supporting the digital trade and some of the sectors that you have seen really growth who are not playing basically the catch-up game.
Thank you very much for this question. So what is Equity currently doing? I'll say number one was to do a lot of digitization for financial services. And we have a famous product called One Equity. So, and that One Equity can be accessed through different channels. So that was number one, to be given to our customers. So today, if you want to do, let's say, movement of money, you can either use your app, you can use your USSD, you can use your cards, you can go to an agent, and then you can go to the web. So the digitization of the financial service was number one. And that facilitates the trading, the digital trading. Number two is to do movement now of money through different countries. That's what we call inter-countries now. So there's been a lot of negotiation between governments. That's where the legal game comes in. A lot of agreement, and also now a lot of integration. I think the minister came back to that. For that to be able to do a digital trading, there's a lot of integration at legal level, at a business level, at a technology level. So today, for example, with Equity, you can come and deposit your money for a customer in Kenya or in Tanzania or in Uganda, and that person is going to receive the money immediately. So that element of digitalization of the services. Something else that have been done also, it's a lot of partnership and integrations. Here, partnership, we have so many service providers. For example, we have fintech companies, you have international money transfers. So we've done a lot of partnership with them so that their products are available on different channels. Today you can do remittance with Western Union, with so many others fintechs, and this is again through digital. So today you can have a person in the US that is sending money to a customer in Tanzania. They have options. So there's quite a lot of options. Something else that we also have done is because we're doing trade through international currency. So you can have your exchange, your forex on the digital again platforms. So you can say I'm going to buy something, let's say in South Sudan, and then you can immediately convert that money in that currency and do your transaction. So the digitalization of the financial service has been number one. Number two, what have been done as well is we are using a lot of tools like AI and machine learnings for credit scoring. So today, when you wanted to get a loan, you had to move to a bank. And you go to a credit officer, they'll do your rating, they'll look at your risk appetite, and then they see what collaterals you have, and then now they say, okay, you're eligible for this money, this amount of money, and they give you a loan. Today, we're doing digital. So that's whole service that was done by a team. We're doing it physical. Now it's been done by technology. So like we speak today on your phone, you can get up to 500,000 digitally. But now we are creating other products for SME, for other firms. Let's say if you want to purchase a car, you can also do digitally. Why? Because now we're using technology to do a scoring. Because we already know your behavior. We know how you're saving money, how you're moving money on your account. So with the tools now we're able to see, okay, this has been the trend for this customer. Now we're able to provide loans on a digital platform. So that customer does not need to come anymore to our bank or to our branches to get that facilities. So this is something else. Something else that we're also doing on the digitalization is, as I mentioned, we are transferring everything on the digital. So you really come to the branches for the last resort. Of course, the mentality or the behavior is still a little bit far. Sometimes people think they still need to come and with a check at the bank, but this is something that is it's going to move. Now, what we've seen growing, it's again the movement of money. So movement of money has become like really an easy way to do. People just need to do it through phones. So it's very rare that you have people coming for a bank to do movement of money. And that's again the flagship of integration with third parties like the telcos and also the fintechs. So this is where we're seeing a lot of trends in growing of transaction. Another thing that we've seen is on the money transfers, international money transfers, because and the area where we're seeing is a lot of diaspora sending money for different reasons. So this is also an area. It's something before they had to wait for someone who's going to travel to that specific country to bring the money. But then we've seen another area where we're seeing a lot of uptake again is on the digital. We're looking at the masses. That means let's say we call them the wananchi. So even if you're trading with 100 francs, you're able to open an account with Equity. Now, you being able to access your account, you're able to get any service. So you don't need to come to a bank and you see how is giving them opportunities to come and get facilities of the loans. So there's but mostly I would say the innovations that has happened in transforming the traditional banking into digital banking has really improved our digital trading. Thank you.
Thank you very
You're welcome.
much. You talked about something that is quite interesting, I think, for the business community about using technology, especially AI, in credit scoring. I remember the other day someone was asking this question in a network and people couldn't believe it's happening already. They were like, okay, this may be something that is in the pipeline. So it's really interesting to know that this is something already happening. And my question also come back to you, sir. It's very quite interesting that we're having two different contexts, but a kind of similar. We're talking about the East African experience, and most of the time I believe Equity is operating in East Africa. But I want also to get your insight on what is going on in the Nigerian market mostly. You advise clients who want to take advantage of the opportunities that the African Free Continental Trade Area offers. What are the key barriers that you find when it comes to cross-continental trade, and how do you support your clients in building like digital business in Nigeria or elsewhere? I know that Nigeria also has a very big diaspora, so I assume that you even go beyond Nigeria.
Well, I was going to limit it to Nigeria, but now you say into Africa. There are a lot of barriers, tariff and non-tariff barriers. The tariff barrier is a massive issue. Importing goods in Nigeria now, it's unbelievably ridiculous, and it is causing a strain on importers and business owners in general. But if you're talking about digital trade, there are things that you need to look at in terms of cybersecurity, data governance, and also consumer protection. Those three things are very key, and we advise clients as it relates to that those are very essential if you want to have a thriving business. But we speak about the AFCFTA, there has to be a harmonization of laws. Each country has its own idiosyncrasies, right? So each country has a law particular to their country. But there needs to be a harmonization, there needs to be a unification of laws, otherwise the AFCFTA is not going to work. And that's where the digital protocols come in. As you continue to refine tech and AI, you best believe hacker somewhere in Africa is also refined in what he's doing as well. So there is massive risk involved in digital trade. But I think you can overcome those hurdles with good governance and also flexible governance. I think the private sector are the people that are going to drive the AFCFTA, and I don't think there has been enough private sector engagement in negotiating the protocols in particular, because if I speak about Nigeria, our laws are fairly archaic, and I don't think they really cater to digital trade. There have been, some concerted efforts to, the Nigerian startup bill has been passed, and I think that's a good step towards, first and foremost acknowledging SMEs, and also, providing, a buffer for them to thrive in a very, very difficult and harsh environment and landscape in Nigeria in particular. For SMEs in particular, there needs to be an enabling environment. There has to be an enabling environment. So you're talking about moratoriums for taxes and customs, which the Honourable Minister mentioned. There have to be waivers of certain taxes because the tax regime in Nigeria is very high, and I presume it's high in Africa in general. So those are the things you have to look at, because the SMEs are the ones that are going to drive the AFCFTA agreement. But we also need to look at data. It's so important. Data localization. How do you store? How do you process data? There's been a lot of investment in data centers, which I think is massive. And I think data centers are so technologically intensive that you need to find sort of exemptions and waivers to sort of support them. If not at national level, then maybe having a data center in a free trade area, which are exempt from taxes in general when they're importing services. So those are the sort of things that we've seen in Nigeria. But and I say this to everyone because I presume everyone's in the private sector here, we need to engage the public sector a lot more. They don't understand tech, and that's the reality. For example, in Nigeria, if you look at Binance, if you look at one of the largest cryptocurrency platforms, our government just didn't understand what cryptocurrency was. So instead of having dialogue, instead of discourse, it was like, do you know what, let's just put a policy out to stop this, to halt this. And then we moved back from that and said, okay, we're going to allow it. Well, then we've gone back to square one and said to ourselves, we don't understand it, so let's just completely halt it. And then you use Binance as an excuse for the devaluation in Naira. We need to do a lot more public and private sector engagement. It's so important, and I encourage everyone here to please engage your policymakers and lawmakers, because as much as they think they know everything, they need private sector engagement. Thank you.
Yeah, you said something interesting about harmonization. If really we need to take advantage of this agreement, and you also talked about some of the challenges related to cybersecurity. And I believe with the lawyers in the room, they have been here in Rwanda trained about the new law about data protection and privacy policy. And I want to understand also from this perspective, with the new policies, with the new laws being adopted, how is private sector that you're calling to be involved going to be really driving this and pushing for the policymakers to make some laws and registries that are kind of harmonized on the continent?
I mean, it all stems from having dialogue in these sort of conferences, and I think these conferences are important because they bring together public and private sector. And I think there has been a concerted effort from both parties to to form some sort of alliance and how we go forward. Stemming from the digital trade, there are so many issues that in terms of intellectual property. How does a consumer and a service renderer protect their intellectual property? How do you, in terms of competition, how do you create laws that distort anti-competitive behaviors and dominant position, market position, and abuse of dominant position? So those are very key. I think it's also important to understand the fact that Africa is still at an embryonic stage in terms of digital trade. There are going to be pitfalls. There are going to be cases where we don't necessarily get it right, but we as private sector need to, I wouldn't say educate because that's a bit condescending, but I say we need to have a discussion with the government. You have to be flexible. You have to be able to pivot because tech is evolving every single day, as the Honourable Minister said.
So in Nigeria in particular, there has been a clamour for more private sector involvement in terms of law drafting, white paper drafting, and I think that's going to transcend into Africa eventually.
I just wanted to comment on the importance to involve the private sector in the drafting of laws and regulations. I'll give you an example for the case of Rwanda for the national cybersecurity and the data privacy and policy law. So we were mostly like the banking sector. It's a very regulated industry, and there's quite a lot of engagement that's happening in terms of when there's a new regulation for the banking sector, but also for some of the laws that are going to attach. So, for example, in this case for the data protection law, we've been involved in providing some of the insight because it's very important for all the time, the banking sectors have been thinking that the data of the customers belongs to them. And there's now a trend to say, actually, those data do not belong to you, they belong to the customers. So there's a whole mentality change that needs to happen because I know all the data of my customers belongs to me, but they do not. So if you look at the way the government of Rwanda have done through the central bank and the National Cybersecurity Agency is to involve the third parties in drafting, but also in the implementation. They gave us enough of time to implement. So I think it started October last year, the actual implementation. And what the benefit of involving ahead of time the private sector is, number one, like for the banking, we had to re-engineer the way we've been dealing with data. So you just collect data, it's for the bank, it's only for financial services, but sometimes with evolving of technology, now we're going to do something else. Like we're now doing credit scoring, it's based on the data of the customer. We are going to do, today, let's say we put in place an insurance firm, we are going to use that data to know what type of insurance we're going to sell. So there's now, as we're saying, data is now the fuel. So there's a lot of things that we're going to be doing with data to innovate new products. And the involvement of to come back to the involvement of the private sector, it's very important because it's also, at the end of the day, the regulator will put in place laws, regulations, but the implementer will be the private sector. So if the private sector is not involved at the beginning of when this regulation are coming out, it's going to be a total chaos, and we're going to have a gap. And that's why maybe we've been saying most of the regulation will come like catching up, or we're going to have a lot of gaps. But if we work together, private sectors and the regulators, this is going to even improve and be a platform of more innovations. Yeah, so I wanted to comment on that.
Sorry, can I just supplement what Carol said? She makes a very important point, because I'm still bewildered why the private sector was not involved, especially in digital trade. I read the draft. I'm not quite sure if that's the final draft of the digital trade protocol. And for example, if I'm Google and I incorporate a company in Rwanda, a local company, I can transfer the data to the head office in America. So while we continue to think that we should mirror sort of economies who have sort of a comparable advantage per se, I think we need to be very careful, because Africa is a completely, whole different ballgame, and it's not the West. It's as simple as that. So we do need to be very careful how we curtail these issues.
Yeah, you said a very good statement, and the Honorable Minister Paul also mentioned about that the Global South is always playing a catch-up game, but at the same time, if I got you right, you also highlight the need to make things to fit our own context, not like copy and paste and duplicate things. And you mentioned something that is quite interesting, and I want to come back to Carol about the digital skill, the need for digital skills. While we may come up with different packages or different technologies that are needed in this era of African free continental trade area, there is also a digital skills gap where the literacy is still down, and the infrastructure are not there. And what is Equity Bank doing in that regard to balance the supply and demand, making sure that your clients are aware of your services, that they need to use this kind of digital solution that you provide?
Okay, thank you very much for this question. So, first of all, I want to emphasize that capacitating people, customers, and citizens is very important. Why? Because number one, you prepare your customers. Here in this time, I'm a banker. You prepare them to adapt to the changing of the environment of the market. And for this, I want to pick a specific example I've read, I think 2 weeks ago, that is in Singapore. They've passed a law that is going to allow citizens above 40 years old to go back to school and learn for data science, artificial intelligence. You can imagine, as a country, that is a deliberate, there's a deliberate willing of the government to know there's a technology changes coming, but our population will be not relevant. They're not going to be replaced. They're now going to equip them so that they should now be living in the era we are in, the fourth generation. So that is very important. Number two, once you give enough skills to our people, again, you increase productivity. So if I was a business person only operating in Rwanda, but then you train them in digital skills, I'm able to go on the web, I'm able to buy products, I'm able to do import, export, okay? So you again, increasing the productivity of these people. Something else that you're also doing is you allow people to use a lot of technology for their businesses. So like these automations and processes. And when you have automations of processes and the whole business model, then you're able again to be more efficient and you reduce your cost. So again, our people are becoming more profitable and they can make more money, and then the economy is growing. So there's a lot of benefit in providing digital skills to our people. Now, what is Equity doing? So the way Equity is structured, you have two legs. You have the commercial leg, that's where you see the way we're doing business, we're providing loans, we're collecting deposit, and then we're doing business. Then you have the other side of the coin, that is the social engine. Because you, as much as you can be an operating in the markets, in this case the Eastern African market, you're making money, but then you can't see value if the people are not following up. You see, you can't keep giving loan to one person. That person now will not have enough ideas to build, and your economy will stagnate. But if you bring, that's what equity main purpose is, you start from the 1 inch. So you grow that person until it's able to becoming a big corporate. And for that, you need to do a lot of skills, capacity building. And so now that social engine of the equity is doing a lot of social activities. And in social, for example, one of the products that we do is, if we have a program called ELPs, where we pick the best students across the country, and then we give them an internship for like 6 months, and then they get the best university, and they can come back equipped. Now, something else we're doing, like for example, the SME, which is very important for the FCTA, is growing the SMEs. It's a lot of trainings on the product and services, so that the way they can use it. And we're focusing on digital products, because we don't want people to reinvent the wheel. They can just use products there. You don't need, for you to start a business, you need to have a big hall, you need to have, you don't need. You can easily do your business online, and you should be also, successful. So the social engine is helping us now to build the capability of the customers so that they can go to the different level. So if today you were, let's say, seeking for a loan of 500,000, tomorrow you should be able, let's say, to achieve 1 million, because you're growing. And that's part of the continuous capacity building that we're doing to our customers. And because of, again, of the opportunity that the bank is having, being operating in different countries and partnering with so many people, we have a number of products we do, for example, with MasterCard, with the government of Rwanda, with BRD. There's so many partners that are here to de-risk the market. So we work with them and ensure we capacitate the people. But most of our products are being done through the use of technology. Thank you.
Thank you very much. As we wrap up, I would like you to say just in a few words, what do you need as a homework or as a takeaway for people who are in this session? How do we take advantage of this agreement as a private sector, as lawyers? What do we do to take advantage of this agreement? And just say it in a few words as we wrap up. Yeah, thank you.
Okay, I'll try to summarize. First of all, I want to thank the team that organized this session. And it's not common to have the tech and the law people in the same room. And it's very important. I think the Honorable Minister of ICT stressed on the same. We can innovate as tech people, but then there's also some limit, or we need some safeguard. And that's where the legal family or the law family comes in. We need to work hand to hand. And coming back to the question, I think that the Honorable Minister said of justice, technology is not here to replace, but I think it's more augmentation and also repurposing. So if for example, one process has been done by 2 people, but it was so manual, it's been automated. We take those people and repurpose them to something else. And repurposing means you need to increase skills, and that's what like Singapore is doing now. So for the lawyers that are here, or the future lawyers to be, I think there's a need now to see how technology is going to support you to do the work, because there's something that we can't replace. As much as AI is going to take, let's say, notes or the case courts, I don't know how you call them, but now the analysis and everything that will be done still by the lawyers. So technology is not going to replace. Now, for specific the agreements, there's a lot of opportunities for countries, and as the lawyers and the tech that's in the room, there's quite, there's a lot of things to be done to ensure that it's successful. Because I was looking at the numbers, if you look at the percentage of trading inter-countries, it's still very low. Why? Because of the challenges that he mentioned. You have issues of tariffing, you have issues of infrastructure, you have issues of accessibility. We still have places where you cannot travel from one country to another. So, and that can only be achieved once we have legal framework in place that are standardized across. So this will bring countries together, and I know we can benefit from opportunities of trading between countries. And again, it goes back to for Africa. Why is if today you have the European Union, today they're able to do trading. You have the others unions across, but for Africa we've not reached to the level where we can say, okay, now this is a preferential price or product because I'm in Africa. We still see each other as competitors. So how do we remove that competitors' mindsets? And that's why now the tech and the lawyers we made that possible. Thank you.
Like I said before, this is a massive opportunity, being the single largest market in the world. Now it's a case of implementation. We signed the agreement in 2019 and it's 2024 and we haven't seen any real penetration, if we're being honest. It's going to take a lot of PPPs, public-private partnerships, sensitization, capacity building, training, technical know-how. Personally, I'm not happy with the over-reliance on the West. We need to be independent of the West, and everyone here has got a role to play in the implementation of the AFCFTA at the end of the day. So continue to engage, continue to have discourse and dialogue with these kind of conferences, and I'm sure in the next 4 or 5 years you'll see a tangible difference and a material difference in African trade, that you can actually reach out and touch it. Thank you.
Thank you. Ladies and gentlemen, a round of applause to our amazing panelists. Thank you very much.